Today, let's talk about the 7 fatal mistakes we see investors make when they're investing in a syndication and how you can avoid them. My name is Rod Khleif, and I've owned over 2,000 homes and several apartment complexes so far in my career, and I'm the host of the Lifetime Cash Flow Through Real Estate Investing podcast, which I'm blessed to say has been downloaded over 5 million times. I'm also author of the book, How to Create Lifetime Cash Flow Through Real Estate Investing, which is all about multifamily real estate. I also host several sold-out live training events each year teaching people how to invest in multifamily properties. So now let's talk about those 7 fatal mistakes that I see investors making. The first one is not checking out the sponsorship team. How congruent are they? Are they good business partners? If you invest with a team of syndicators, partner infighting can destroy a great deal. Partnerships are like a marriage. They're very easy to get into, but they're very expensive and hard to get out of. So if the partners start having problems, so does the property, and so do their investors. Make sure that the partners you're investing with have a great long-term track record together. So that's fatal mistake number 1. Number 2 is a lack of experience in that partnership team, in that syndication team. For example, if it's a beginning syndicator or a couple of beginning syndicators and they haven't aligned with a team of more experienced operators, or they're not using a coach or a mentor, someone to look over their shoulder, there's a much higher risk of failure. So that's number 2. The third fatal mistake is being undercapitalized, undercapitalization. I see this one time and time again with syndicators. They syndicate an apartment complex and then they underestimate how much capital they're going to need to renovate the property and or sustain the ongoing operations of the property. And then they run out of cash. So then they start putting off repairs and maintenance. Of course, their tenants get upset and they leave, the good ones, and then the lower quality ones come in, collections go down, and cash gets even more scarce. And the property literally goes into a death spiral from which it never recovers. I'm actually buying a property that fits this exact description right now because the operator ran out of cash. So if you're looking at a syndication, make sure they're raising enough capital up front to fully cover all the renovations and that they collect a decent amount for operating reserves, like a rainy day fund. It's critical right now. Fatal mistake number 4, underestimating how bad of an area the property's in. Unless that property is in the path of growth or maybe that path of gentrification, you can't make a property better than the neighborhood that it sits in. Crime and vandalism will prevent a property from appreciating, and tenants won't be able to afford the higher rents that the syndicator needs to get a good return on the equity, a good return on your money. Okay, so that's number 4. Fatal mistake number 5, hoping for market growth to hit the Proforma numbers that are, that they're presented to you. Markets can shift. They can shift a lot faster than you think they can, and they can go the other direction. You want to work with a sponsor that's creating most of the value by forcing it. It's called forced appreciation, and what they do is they bring a property up to its full potential, to whatever that market is right around that property in the competition. They make improvements to the units that are going to bring higher rents. And then the market growth is just gravy on top of that. That's a bonus, okay? But the key is that they're actually forcing appreciation. All right, fatal mistake number 6. This is a big one as well. We're seeing a lot of this right now, and that is failing to stress test a deal. You have to stress test the deal. The syndicator has to show you how they stress tested the deal by showing you what happens to the returns if the occupancy drops or the rents drop, or vacancy goes up. You need to ask them if they've done that and have them show you how they did it. When we stress test a deal, we'll look at it at 25 or 35% vacant. What does it look like, under that condition? That's called stress testing, and that's preparing for a potential contraction. Okay, the last fatal mistake that I'm going to chat about today that I see a lot is a poor leverage strategy, especially in this market right now. People get a loan and they can't get another loan to pull them out of that existing loan. So a very common dynamic is someone will get a bridge loan, but they didn't think about a possible downturn, okay? Bridge loans are pretty easy to get right now, and they didn't stress test the deal for maybe a higher cap rate, okay? And of course, when cap rates go up, values go down. So then they're unable to refinance out of the bridge debt, and sometimes they'll lose the property, okay? That's how big a deal that one is. So those are the 7 of the most common and sometimes fatal mistakes that we see investors make when they get into a syndication. So you've got to do a little bit of homework, my friend. Now, at the end of this bull market, whenever that is, there's going to be a lot of failed syndications. when that strong market growth isn't carrying deals any longer. And the operators made one or more of those mistakes that I just outlined. So let me mention a couple other quick things that you should look for when you check out a deal. By the way, if you're investing in a deal, you have to do some homework. It's very, very simple, but you must do it, okay? Do a little bit of education before you give your money to somebody. Now, number one, check the market or the submarket that property's in. Make sure that jobs and population are growing and that growth is above the national average and projected to continue. Now, some places you can check that. I'll give you a couple websites. One of them is bestplaces.net. Another one is city-data.com. And another thing is you can check crime on those websites as well. So you make sure that you're not in a high crime area. Now, the second thing I want to mention to you is check the deal. Make sure that they're actually creating value through forced appreciation. Make sure that there's a simple business plan for that property that makes sense. And make sure that their assumptions are conservative across the board, that they're not pumping up their assumptions. Very important. And lastly, make sure the team has experience in all aspects of this exciting niche, that they've gone through a downturn before. Take a look at their track record. Now, I'll tell you, we are actively doing syndications right now. We're raising equity for deals from accredited investors. And one of the things that I do is I make it a point to teach my investors and educate them as part of the process. So we do webinars, regular webinars, and you're getting a behind the scenes look at what's going on with our deals. So if you have an interest in that, please click on the link below. We'd love to set up a quick call and just talk to you about your goals and see if there's some synergy between us. So thanks for watching. My name is Rod Khleif, and I hope to speak to you very soon.